Nvidia is having one of its biggest sell-offs ever. Here's what this means for your portfolio and the broader market. So China has announced they have their own version of OpenAI, which they were able to train for significantly less than OpenAI was able to train ChatGPT. ChatGPT cost $100 million to train. DeepSeek only spent $5 million. Not to be dramatic, but this is kind of the market's biggest fear coming to life. This entire time, the AI has been driving market gains. The concern has been that training AI is too expensive to justify the cost. And now, of all people, you've got China, who the US is already in competition with over a slew of issues, coming in and saying, yeah, we were able to best you guys and do this for cheaper. So now you've got Nvidia stock down by the most on record if it holds the level it's at as I'm making this video on Monday morning. You've also got all of those big tech names plummeting because, again, there's concern that they spent too much money training AI. So what does this tell us moving forward? Well, the good news is that Nvidia's chips are still what is needed to train AI. Yes, these companies might need less of them, but there's still a chip shortage according to TSMC, and that means that as long as supply continues to be lower than demand, they're going to be able to charge an exorbitant amount for their chips. And Nvidia has also been working on increasing their availability of additional products. They're expanding into humanoid robots, for example, and they are trying to do that in order to future-proof the business. The good news for the big tech companies here is, okay, yes, maybe they overspent on AI previously, but maybe DeepSeek tells them that they don't have to spend as much on AI moving forward, and that could actually be a cost-cutting measure that could allow them to protect their profit margins and return that money to shareholders long term. What does it mean for you? As always, I think this is a great example as to why you should only be actively investing in the market if you have incredible investor hygiene and balls of steel, just to be direct, because you're going to see double-digit losses in the market. And that's probably going to happen a lot over the course of this year because the market is so inflated. We've had 2 years of double-digit gains. Any spook to the market is going to lead to a sell-off like the one we're seeing today, just because there is so much froth right now. Remember that on average, we still have the S&P 500 returning 10% annualized returns over time. So an event like this, don't freak out. Don't check your 401k. You're going to be fine. And we also have big tech earnings starting this week. So we could see huge positive results, which could lead to a rally in these stocks that reverses some of the pressure they're under today. I'm a financial journalist who helps you make sense of your investments. So follow me for more markets news.